Hi everybody, Alex Deploy here from Expert Forex. I hope you enjoyed today's Forex trading video.
Hi everybody, Alex Deploy here from Expert Forex, and today I want to talk about a very important cheat that I learned very early in my trading career. It's probably about 14 years ago now, and I was lucky enough to start trading with some really experienced traders. And one of the most important cheats or lessons that I learned from one of these traders was to spot a trade on a long-term chart and then to treat it as a very short-term transaction. And the advantage of that is that you see a lot of things in the short term that you don't see on the long-term charts. But the main advantage is that you can use tiny stops to enter huge Forex transactions. So to give you an idea of this, I've created an example, and it's most probably not the greatest example, but the principle is most probably more important than anything else. So let's say you're trading the 4-hour chart. This is the pound USD, and it starts trending very strongly in an upwards way, and in an upward direction, and it has made a retracement in an upward trend. So that's the ideal time to enter, join the trend. So the first thing you do is you draw a trend line on the 4-hour, and you say the minute it crosses that line you want to get in. Now the thing to do if you were doing the 4-hour chart is to say, all right, then where do you want your stop to be? Now your stop could be just under the previous low, so you would most probably place it around there for this particular transaction. Now this transaction has got a target up here, roughly well over 100 pip target. So we're talking about an entry here 64, 50, we're only talking about a 35 pip stop here. So this wouldn't be a bad transaction to do with a 35 pip stop. But now if you look at it, if you then take the cheat that I was talking about and you then flip over to a 15-minute chart, and you look at the 15-minute chart, and this chart is exactly at the same time as the 4-hour chart that we've just looked at, you will see that there's a lot more happening on the 15-minute chart. The 15-minute chart has an extremely strong divergence. Here's the divergence coming down on, this is the RSI 4, very strong divergence. It has also violated a trend line, quite a important trading signal, where it's made two nice waves and then violated the trend line. So on the 15-minute chart we actually have a really good trading signal. It's a buy signal, and we can trade this as a 15-minute buy signal. So what we've now done is we've refined what we've seen on the 4-hour. We've seen nothing of this on the 4-hour, but we've refined what we've seen on the 4-hour, and we can now do pinpoint entries with pinpoint stops. So what happens is you then put your stop where you think it's quite safe. So I'm going to put my stop below the previous candle, a few pips below that, because you've got to take the spread into account, and suddenly your stop becomes 16 pips opposed to the 34 pips. And in fact the 34 pips is quite a small stop for a 4-hour transaction, but here we've reduced our stop to a very small amount, and because we're treating this as a 15-minute transaction, and we're also making sure that it has a really good entry signal. So that's the main lesson out of this, is that spot the transaction on, let's say, a 4-hour, 1-hour chart, and then home in on the 15-minute or even the 5-minute chart to refine your entries and your stops tremendously. You can have much smaller stops on those short-term charts, and you can then get into the transaction quite nicely. What then happens, and I'll just forward this transaction as it goes. So there's the it had a bit of a jump out of that entry, and it still looks good on the 15-minute. Whoops, came all the way back on the 15-minute, then went all the way up, went sideways, and now it's taking off. It's really gone to retest the breakout point, and it's now starting to move. So on the 15-minute chart, what we could do now is move our stop, which is down here. we can now move it to our break-even situation, a position. So we move it to break-even. So by doing that, we have given the transaction enough time to retest its breakout position and then move on. So that's the other important thing about the 15-minute chart. You cannot do that on the 4-hour chart. It doesn't show enough detail. So we've seen the retest of the breakout point, we've seen the continuation, we've moved our stop to break even. So what we now have is a risk-free transaction. If it comes back and hits our stop, we've lost nothing. It's a risk-free transaction. But we now move it over to the 4-hour chart and we say, we have entered this deal for you, Mr. 4-hour chart. It now becomes a 4-hour chart transaction, but a risk-free one. So how good is that? So we can then manage the transaction accordingly on the 4-hour chart, knowing that it's a risk-free transaction, and we can manage it to the intended target, which is way up in the sky, but it's on a risk-free basis, so the pressure is off. So here's it's not really a cheat, it's just not a good way of trading, is do exactly what you've seen now. You spot the transaction on the long-term chart and you enter it on the short-term chart, and you give it a good send-off to the point that it becomes risk-free on the short-term chart, and then you let it go, and then you start trading it on the long-term chart. Now you'll be amazed how many 200 pip transactions start in this way, and this is one of the key fundamentals that we use when entering double in a day trade. So I hope you found this sheet interesting, and try it on a couple of transactions. You'll be amazed how much more economical your stops can be, and how much easier it is to manage the transaction until it reaches a break-even point, and then you can start managing it on a longer term basis. So from me, Alex Ploy, cheerio.
Thanks for watching this video. You can find links and more information about the video in the description. If you found it interesting, please like it and share it with your friends. Also remember to subscribe to our channel so that you don't miss any future Forex trading videos. So from me, Alex Ploy, cheerio.